Hey folks, and welcome to the Pipnotic Symposium for the 13th of December 2022. And today we're going to talk about supply and demand, how to use the software, and how to apply this stuff on the smaller time frames. So normally, then I have my daily chart here to the left. In the middle I have my 4-hour chart. And on the right, I have my hourly chart. And this gives me just a really nice overview over what's going on for a specific asset. But you don't have to stay on these time frames. You can do whatever you like. If you want, you can put this on the monthly, the weekly, the daily, or you can put this on the 4-hour, the 1-hour, and the 15-minute chart. This is fine as well. And I think you'll find that the software can work as well on the smaller time frames as on the bigger time frames, as long as you're paying attention to the context, as we discussed in an earlier video. When I mean context, I mean that you need to know where you are relative to the major flows. So having an idea of what's going on the 4-hour chart certainly put things in your favor when you're assessing entries on the smaller time frames, such as the hourly and the 15-minute chart. So what you could do for this particular configuration is, if we focus on my setup, where I have my longer term, my medium term, and my shorter term, and I have the same indicators on all charts, which is the supply and demand and the default configuration. But over here on the left, on my longer time frame, I have another indicator, and that is sync charts. And sync charts is synchronizing the symbol and the zoom, but not the time frame. And I apply that to this chart. And so when I drag a new instrument over to that specific chart, the other charts are updated as well. And so I can see what's going on the long term, medium term, and the short term. And I don't have to drag it onto the first chart and the second chart and the third chart, because the sync charts is taking care of this for me. And sync charts is in the software channel on our Pipnotic server, and it is right here. So just download this, put it in the indicators folder in your MT4 terminal, restart the terminal, and then it'll turn up and it'll be ready for use in your list of indicators. So what you do here is, again, focusing on the most recent areas of supply and demand. And the most recent are important because this is showing you supply and demand that is intact, and supply and demand that is in line with the sentiment for the current session or day. And this stuff is important because if you have an economic data release that comes out more positive than expected, well, then we're going to see the affected asset appreciate in value typically. But if you look at the same asset maybe a month after this economic data has been released, well, then maybe there's not such a connect anymore with that specific piece of data. But if you're looking at the most recent 20 periods, then I think you'll find that you will be very much in alignment with what's going on here and now. And so what I do is I have this setup here, and I have my charts showing me about 24, 25 candles, and so I'm seeing at least 20. So when I see an area of supply and demand that's formed, I mean, I don't want to be trading areas of supply and demand that are more than 20 periods old. So 20 periods on the hourly chart would be 20 hours, 20 periods on the 4-hour chart would be 80 hours, and 20 periods on the daily chart would be 20 days. Okay, and if you're using different time frames, like a 15-minute here, well, then you would just, well, obviously this would be much less. Okay, but it still applies, the rule still applies. So I'm just moving one at a time like so. I just move through my list of assets, and I look for something that looks attractive. If I find something that's in alignment with what else I'm looking at, well, then I will consider taking the trade. We just keep going, find something that looks interesting, and then discuss why it looks interesting. As an example, I mean, you can see here quite clearly that that we are in an uptrend and we're having a bit of a pullback and price is wriggling higher. Well, that would lead us to believe that we would maybe have a pullback before price continued higher. Also looking at the currency strength, we have the Australian dollar that is stronger than the Singapore dollar. Okay, and so you can see the same thing in the histogram. If you're using the histogram, you're showing you the exact same thing, but in the form of a histogram and not two lines. So there's nothing here that's worth noting. It's going to go to the next one. And it found this hourly area, which I've put on, so now I'm waiting for that to occur, waiting for price to move up to my entry. I'm not sure if this is a very good area, because I like this one more, because this is where the slingshot was pulled back and we departed. But this is a fresh area of hourly demand, and so a small reaction is not unreasonable. Okay, and here we had the 50-minute area. Price poked into this area of supply. We had a small reaction, and currently we're moving sideways. We're gnawing away at the liquidity available in this little pool of liquidity here. So we don't know what's going to happen. Maybe price will go through it. Maybe price will correct and move to the other area of demand on the opposing side of the market before continuing a little bit higher. So again, moving to the next one by one, and just looking for these areas that just make sense. I mean, here we have a 4-hour area of demand. We have a 1-hour area of demand. And in here you can see that we had the most recent area of demand. This one was formed, price tested it, then it went above it. And now price is looking maybe to come back to this one here. Would we trade this one? No, we wouldn't trade that one. And the reason we wouldn't take this one is because we have to apply a bit of discretion, and the discretionary rationale for not taking this trade would be that this is a child and this is a parent. So this is not demand, this is a reaction to demand. This is the demand here. So we wouldn't take that trade there. Okay, you see here the price is currently poking on this little area of 50-minute demand. We had this one here before. Price went up, we came down to it, we reacted, we came through it, we came down to this one, we had a big reaction, we formed another area of demand, price came to it, and now we are sitting on it now, figuring out what to do. Okay, so these are super sensitive areas. But when you're on the 15-minute chart or even the 5-minute chart, if that's more your thing, then you have to pay attention, and you have to be in front of the computer ready to act, because things happen very quickly. In contrast to the daily demand, the daily chart or the weekly chart or even the 4-hour chart, things are typically slowed down just a little. So we move to this one here. This is the Canadian dollar, Japanese yen. We had an area of 1-hour demand. It was formed. Price left it. We tested it. We've already had our 1-to-1 risk reward on that area. We've got this one down here, 4-hour area of demand. It is 1, 2, 3, 4, 5 periods old. So the likelihood of price reacting at that area is relatively high. Moving on, go to the Swiss franc, Singapore dollar. We have this area of supply that was formed. Price left, and we formed an area of value below it. Now we're currently testing that. Isn't that amazing how powerful these areas are? And depending on what happens, thinking eventually price is going to move back up to here. But you can see how we get reactions on most of these areas. Not all of them, obviously, but most of them. Go to the franc, Japanese yen, see if there's something there that's setting up. We have this area of demand down here, which is interesting, and the reason this is interesting is because this is a fresh area of demand that was formed. Price tried to come back, but we failed. We tried again, we failed. Area of demand here is responsible for moving prices above this high just here. So we could take that trade, and what we would do is we would take this chart, which is the most recent. Sorry, this is the one where my buy and sell zone algo is attached to. I'll click on the 1-hour chart. I'd wait for the software to find it, which it would right there, and then I would simply just click in by clicking on the auto trade button. And when I press this, you can see that the smiley face on the algo just changed from a frown to a smile. So I click on that. It's not opening the trade. I'm not exactly sure why. Maybe I have some other settings. Maybe this is too old. So we'll see what happens there. But I like this level here better because price left here. This is the candle that left, the slingshot was pulled back and then we departed. So I prefer this one here. So I would take this trade here. The trade is opened. I'm going to take this entry and I'm going to move it here, which is where the low of this departure candle is, and I would be happy with that. I'll turn off the algo-trader, reset the settings, and I will move on to the next one, going to the Euro Australian dollar. And I'd see what's going on here. I go to my longer term time frame, and I would look for a reason to get into this trade. We have an area of demand, price rallied, we moved sideways, we moved higher. And looking at this, is this an area of demand that is worth trading? Well, it's debatable, and it's a nice rally accumulation departure. Prices have already traded in this area just down here, and so prices will likely move down to this area of demand and then find support for price there. But we'll see, we'll leave that on. We'll see what happens. Go to the next one, the Euro CAD. So I'm constantly doing the same thing over and over again. If we look at this one here, had this area of demand that was formed. It was 1, 2, 3 periods open. Price tested it once, twice. We came up to this one on the other side of it. This is supply in a bullish trend. So price, as expected, has moved through it, and now we've removed it just here. Now price is figuring out what to do. Okay, so I recommend that you give these tools a go. They're really powerful tools. They're quite simple. Once you get the installation done, which is quite simple, just remember a rule of thumb is indicators go in the indicator directory in the MT4 terminal, and algos, or expert advisors, go in the experts directory in the MT4 terminal installation directory. This is important because an indicator is not going to run as an expert advisor and vice versa. So keep that in mind. Also keep in mind that if you keep getting the DLL error issue, go to tools in the menu, go to the expert advisors tabs in the options dialog and ensure that allow DLL imports is checked. Click OK, and then you won't have to check that every time you add an indicator or an expert advisor to a chart. It's done already. And another thing, you might notice that you have the buy and sell zones algo-trader installed, but it's not doing anything. Or maybe the face here is a frown and not a smile. Well, there are two reasons this could be the case. Number one is that on the on the common tab on the expert advisor, live trading is not checked. When you install it the first time, this will not be checked. So you have to check it and click OK. And then if you want it to do something, you have to allow it to, and you can do that by clicking on the auto trading. If you click this, then the smiley face comes on. If either the button is not pressed or the allow live trading is not checked, then you will not see a smiling face, you will see a frowning face. So just remember this if you're having troubles. But we are down here, this is the 15-minute chart. Just here, we've got a nice little area here. I'm going to remove this, this is a little bit further away from price. This is the reasonable area. I'm going to click this on. I'll open the trade, and I'll leave that. Okay, so this is how I'm using it. It's really simple. I'm not overthinking it. I'm simply focusing on the new areas of supply and demand. The price is close to, within 20 periods. If they're in alignment with the predominant trend, then I'm happy to let the robot take the trade. I go to the next one at a time. Every morning, I do the same thing. to the next one. There's nothing there. Euro, British pound. What's going on here? Yeah, there's nothing here. Go to the next one, and so on and so forth. Okay, but I'm going to leave that for now. If you have any questions about how to use this software maybe a question I didn't cover, please let me know. And if you're using the software and you are getting something out of it, you're doing well or you're not doing well, or perhaps you want to share your process with the other members and myself, make a video. It would be amazing. Andrew Blackburn has done this several times. Annis Dale has done this several times, and it's a really nice way for others besides me to share their process with the others in our community. Because, I mean, I look at how some people are using my software, and I'm actually quite flabbergasted how they're able to use it. There's actually a user of the asset strength reversion algo, which is a very, very difficult horse to tame. And I have a user who's using it on the small time frames, very aggressive risk management and trade management, and they are doing very, very well. But they're using it in a way that I've never considered to use it. So even though I wrote it, someone else is able to use it and become much more profitable with it than me, which I think is fascinating. And so I can see these videos and I can use them as inspiration that can be shared with the other people in the community, but also as potential modifications to the robot for future releases. Okay, well, I'm going to leave it at that. If you have any questions, please do let me know. And thank you.